I guarantee you after watching this video, you'll never manage your paycheck the same way again. In today's video, I'm going to explain a powerful financial strategy called paycheck parking, how to set it up. I'll give you a real life example one of my clients are using today to knock decades off their home loan, and why you need an offset account over a redraw account. Now, when you buy a house, you'll typically borrow money from the bank and you'll pay this back over time with interest. Now, why do you have to pay interest? Well, that's how the bank actually makes their money. Let's say you borrow $400,000 on a 30-year loan at 5.89%. The bank's going to make it really simple for you and break that repayment down into a monthly chunk that you pay back. In this case, the repayment's about $2,369 a month. Here's the catch. Each repayment is broken down into two parts. The principal, which is the amount you borrowed, and the interest, the bank's profit. In the early years, most of your repayment is actually interest. For instance, your first repayment, $1,963 is going towards the bank's profit in terms of interest. Only $406 is coming off your principal balance. Shockingly, the first 18 years of that $400,000 loan, the majority of your repayment is actually going towards the bank's interest and not towards paying down your loan. That means on a $400,000 loan, you're actually paying back about $853,000 in total. That's over double what the original loan balance was. This means the faster we can pay back your principal, the less interest you pay, and that brings us to paycheck parking. Okay, so hopefully you're still with me so far because the next part is extremely interesting. If you're enjoying the video so far, make sure you join the channel. It's completely free to subscribe and takes about 0.1 of a second or less. So Wayne, what is paycheck parking? Well, to put it simply, paycheck parking is directing your salary into an offset account that's linked to your mortgage. Every dollar in your offset account directly reduces the daily interest calculation that the bank does, even if it's only there for a short period of time before it's spent on expenses. It's smart because you're using the bank's own interest calculations against them, and you're keeping your money accessible and flexible. And here's exactly how to set it up. We're going to open up two offset accounts. The first account is going to act as your savings account. And this is where your pay is going to get direct debited into, and all your direct debits such as Netflix and other subscriptions that you may have are going to get direct debited out of your savings account. That way the money is always available and you're always up to date with your bills. The second account is going to act as your everyday spending account. This is going to have a card linked to it, and this is what you're going to use to pay for your groceries and other everyday expenses that you normally put on your card. Now, if you're in a relationship and you do prefer to keep your finances separate, that is completely fine as well. Essentially, we'll do the same strategy, we'll just have individual accounts for each person. Okay, I do have hundreds of clients already using this strategy to knock decades off their mortgage and save them hundreds of thousands of dollars in interest. But I want to give you a real life example. Now, obviously, I'm going to change their name for privacy reasons. Now, John and Sally do have a dual household income of about $140,000 gross per annum. Their monthly expenses work out to be about $4,142 a month. And when they come and see me, we set them up with a mortgage of about $650,000 over 30 years. And at the current interest rates of today, 5.89%. Now, they are on a package product, so they do have an annual fee of $395, and that gives them access to offset accounts. Now, if John and Sally just stuck to the minimum monthly repayment over the next 30 years, which is about $3,851, they'd end up paying back over $736,000 worth of interest. But with paycheck parking, they're on track to paying their home loan off in 17 years, not 30, which is going to save them nearly $586,000 worth of interest. Even once we factor in the package fees, they're still on track to saving nearly $579,000. That is absolutely life-changing, and the good thing is they don't have to make any extra repayments, and they're not making any lifestyle sacrifices. They're simply making their money work smarter for them. Yes, you could technically do this strategy with a redraw facility, but redraw facilities have some major red flags that I think you should be aware of. The first big red flag is keeping control of your funds. At any point in time, the lender can turn around and deny you access to redraw. You've got to remember that when you make extra payments into the home loan account, you're actually re-borrowing the money when you redraw it out. Now, if you ever get into financial hardship, the lender can turn around and deny you access to your redraw account, which could put extra strain on the situation already. Whereas if you had an offset account, well, that's just an account that's linked to your mortgage. In no way are you paying extra funds into the home loan itself. Now, the other big concern I have is tax implications. If you ever turned your property into an investment property in the future, like a lot of my clients do, we use a stepping stone approach to property investment. In the eyes of the ATO, if you redraw those funds out and use it for personal use, for example, you go and use those funds as a deposit on the next owner-occupied property, well, you're tainting the original loan balance on that property. And that could have some major tax implications for you. There are various other reasons that offset accounts are superior to redraw facilities, but maybe we'll do those in another video. If you did want to do it in a redraw account, you can do this strategy there, but you lose the limitation because technically you can't have a card linked to a redraw facility as well. So it makes it kind of harder and more manual when trying to do this paycheck parking strategy. In summary, paycheck parking in an offset account significantly reduces your mortgage and saves you hundreds of thousands of dollars in interest without any extra repayments. It's about making your money work smarter for you, not harder. If you're excited about this strategy, but you just don't know where to start, that's okay. Book a free consultation in with me using the link in the description below. If you've got some value out of today's video, well, I need your help. I've got a goal of being the #1 channel on YouTube for finance and money. So help me boost this video by hitting that like button. And to not miss any content that I put out, please hit the subscribe button and that bell notification. I'll see you in the next video.